So the next asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. So here on the gold spot, we have an interesting setup as well, always. But before we do, let's scale up into the daily time frame and let's look at things from an holistic standpoint where we shall be reviewing what is going on the higher time frame here by using the information we gather here to make a well-informed trading decisions on the lower time frame. Now, on the daily time frame of the XAUUSD, it is quite clear that in the last 1 year, since the last quarter of last year, price action has been on a strong bullish momentum. And to further emphasize this, we have a couple of trend lines here after connecting the series of higher lows, as you will see here. So it is quite obvious that the bullish momentum in this market is very, very strong. Now, in addition to this trend line is my key level situated at the $1,915 level. Now, if we look at what has been going on here since the beginning of this year, you will see how this level had played a major role in determining the direction of price action. It was initially a selling niche at the beginning of the year, as you will see here, and since price broke above this level in the month of March, price action had remained above that zone, hereby giving me a demand zone around the 1900 area. Now you will see that since the month of March, this area had been as when price comes into this area, we have seen how sellers struggled, resulting in buy pressure resuming to push price to the upside. So you can see how important and crucial that $1,915 level is. And of course, you know how we use our key level in this community. When price remains above the key level, we look out for patterns and structures that support the idea of buying that asset. Now, in this case scenario, price closed last week's trading session just exactly above that key level. Now, the question going into the new week is, will price respect that zone one more time to incite an uptrend continuation, or are we going to be witnessing the breakdown of both the 1915 and the ascending trend line to incite a sell-off? Now, to buttress the nature of this, I'm beginning to see an uptrend continuation pattern gradually evolve in this market. Now, if we take into consideration the impulsive move that led us into this area, you will see that we have, hold on a second, you will see that we have something that looks like an uptrend continuation pattern in the form of a falling wedge. And technically speaking, whenever we identify a falling wedge on our chart, it's a very beautiful signal that we are likely going to be going bullish in this market, but we would need price to break out of the resistant line of that falling wedge, retest of structure to incite that opportunity. Now, for us to capitalize on this, how do we intend to do this? Well, we will look at that on the 4 hours time frame. But one thing I would like to mention here, due to the fundamental factors behind the scenes that is driving this market, remember last week the CPI data came in at 3.2%, hereby revealing that the inflation is increasing again. And if this continues, there are chances that the Federal Reserve will likely increase interest rate again this month. But we still look forward to some economic data that are coming in later in the week, which will be giving us clues and insight into what is happening. Now, if the interest rate hike is going to be on the table, then definitely participants will want to take advantage of the yield to bet on the US dollar, hereby resulting in a breakdown retest of the 1915. So in as much as we're looking out for buying opportunity, in as much as we are seeing an uptrend continuation pattern, we are not going to ignore the potentials of sellers too. So we are going to have our minds open for any potential opportunities that will happen here. Now, scaling down into the 4 hours time frame, there is a simple setup I was able to spot here. Now, if you look at the structure closely, and in fact, since the mid-month of August, it is quite clear that we have an uptrend scenario going on here. First of all, I have a trend line which I was able to spot here after identifying the connecting the series of higher lows in this market. Then another thing here is this impulsive move where price started at around the 1,885 level. That was during the mid-month of August, and we saw price skyrocket into the 1,950 zone. And in fact, you know what happens when price skyrocket like this. There are times where we look out for profit-taking activities, which will reflect on the chart as a retracement into structure. And look at what happened here as soon as price got into that our key level at the 1,915. Of course, we identified this on the higher time frame. We begin to see buy pressure. In fact, throughout the course of the second half of last week, we saw buy pressure resume around this area with the hopes that we might likely be seeing an uptrend continuation from this area to push price up. Now, with the scenario we have here, you would agree with me that we are at a crucial point. Price is right above our ascending trend line and of course above our key level at the 1,915. And of course, if price breaks out of the structure, we look out for more opportunities to buy. Now, what I want us to do right now is to scale down into the 1 hour time frame to see how the market participant has been reacting to the price level at around the 1,920, which sits around that ascending trend line. Now, when we scale down into the 1 hour time frame, we begin to see things more clearly. Now, look at the 1 hour time frame here. The new week started on a strong bullish momentum. We saw price started above the 1,916, giving us an impulsive leg to work with. Now, we saw price break out of this range between the 1,924 and the 1,916. So at this point, you see, as soon as price tested the 1,930, we saw a sharp rejection. Well, I'm of the opinion that this might likely be the retracement of this impulse leg that we see here. Now, the question now is how far will this retracement phase go before the uptrend continuation begins? Well, we shall exercise patience here as we shall be looking forward to see how the market would react to this trend line and the 1,924. Now, if we begin to see buy pressure here, like a double bottom structure, then we'll be keen to join an uptrend move where the further breakout of the 1,930 will be welcoming more buying opportunities. So let's see how the market will play out here today. Anywhere above or around this trend line seems most appropriate. So if we bring out our Fibonacci retracement tool to make things a little bit more clearer and have a positive sense of judgment, run it through the previous impulse leg and aim at an area between the 50 and the 78.6% of the previous impulse leg, which will be our golden zone area where we shall be looking out for buying opportunity. So I will be labeling this area as the potential buy zone. So you do want to be marking that out on your chart right now, as let's see how the market will react to the zone. So we have a potential zone right here between the 1,924 and the 1,920 area. So if price comes into the zone and we begin to see reversal patterns or buy pressure around this area, then we are going to be keen of joining an uptrend continuation. So if price, this is still looking very bullish to me at this point in time, so let's continue to monitor price action around this area. However, if price will be dropping below the structures to the downside, then I would like to see a breakthrough of the $1,916.50 level and our key level at the 1,915 to look out for selling opportunity. In fact, a breakdown of that structure we'll take out all the buy positions here to confirm that sellers are likely going to be dictating the pace at least for the first half of this week. So this is what I will be looking out for to sell the XAUUSD for this week. So let's see what happens around this area. Mark these levels out on your charts as you will be needing them as a reference point to guide your independent trading decisions for today.